Hey everyone, and welcome back. Today, we're diving deep into something that's happening behind the scenes in DeFi, a kind of invisible force called MEV. And trust me, you're going to want to know about this because it could be costing you real money on every single trade you make.
And you know the drill here at CodeAccessHub. We're all about making this complex stuff easy to understand. So let's get right into it.
So let me just ask you this straight up. What if I told you there's a hidden tax on your crypto trades? Yeah, a cost that you don't really see, but that someone, somewhere, is pocketing every time you swap a token. Sounds a little bit like a conspiracy theory, right? Well, it's not. It is very, very real. And when I say real, I mean big. The scale of this is just staggering. We're talking over $1 billion in profit that specialized bots have snatched up since 2020. And this is happening on major blockchains. Think Ethereum, Solana, and a lot of the time, that money is coming directly out of the pockets of users just like you and me.
All right, so let's put a name to this thing. It's really important to understand that this isn't some kind of bug or hack. It's actually a fundamental and, yeah, often exploited feature of how a lot of these public blockchains are designed to work.
This whole phenomenon is called Maximal Extractable Value, or MEV for short. And at its core, it's basically the profit that can be made by just, well, strategically messing with the order of transactions inside a block. See, the people who build the blocks, the validators or the miners, they get to decide the final order. And that power, that's where all these profitable opportunities come from. And over time, this has turned into its own little economy, a whole supply chain, really. It all starts with users, right? That's us, just trying to make a trade. Then you've got the searchers. These are the specialized traders running bots that are constantly looking for these MEV opportunities. They then pass these opportunities on to builders, whose job is to pack all these transactions into the most profitable block possible. And finally, the proposer, who's the validator for that block, gets to pick the winning block from all the builders and adds it to the chain. And boom, the process is complete. Okay, so how on earth do these searchers even find these opportunities? Where is all this action happening? To get that, we need to take a peek inside the blockchain's public waiting room. It all starts in what's called the Mempool. The best way to think about it is like a public lobby or a waiting room where every single pending transaction just hangs out, waiting for a validator to pick it up. And here's the key. Because it's public, anyone can see what's in there. This transparency is exactly what those MEV searcher bots are built to exploit. They are scanning the mempool 24/7, just looking for juicy trades they can jump in front of. And that brings us to the two most basic strategies in the MEV playbook. You can think of it like standing in line at a store. Front running is like seeing someone ahead of you about to buy the last hot new gadget, and you bribe the clerk to let you cut in line and buy it first, knowing the price is about to spike. Back running, on the other hand, is like letting them make their big purchase and then you jump in right after them to take advantage of the new situation they've created. These two simple moves, they're the building blocks for almost every MEV attack out there. So now, let's see how these two strategies get combined into what is probably the most common and honestly the most damaging type of MEV attack for everyday DeFi users. I'm talking about the sandwich attack. Okay, here's how you get sandwiched. First, a bot spots your large buy order sitting in the mempool. It immediately front-runs you by placing its own buy order for the same token, but with a higher fee so it gets processed first. This pushes the price up just a little. Then your trade finally goes through, but now you're paying that new, slightly higher price. And what happens next? The bot immediately backruns you, selling the tokens it just bought for an instant risk-free profit. Your trade is literally sandwiched between the bot's two trades, and the bot walks away with the difference. But hey, sandwich attacks are just the tip of the iceberg. You've got arbitrage bots that profit from tiny price differences across different exchanges. You've got liquidation bots that are in a constant race to be the first to liquidate a bad loan and snatch up the reward. And then you get into some really wild, more theoretical stuff like time bandit attacks that could, in theory, rewrite blockchain history. The creativity and finding ways to extract value here is pretty much endless. So, we've gone over the mechanics, but what does this all look like in the real world? What's the actual financial damage report here? Well, the numbers are frankly mind-boggling. So that 1 billion plus figure, to really put that into perspective, it helps to think of MEV as this massive parallel economy that's running right on top of blockchains like Ethereum. It's got its own players, its own rules, and the entire game is focused on one thing: extracting value. And this is not some old problem that's been solved. It's actually accelerating. In 2023 alone, over $600 million in MEV was pulled just from the Ethereum blockchain. So the takeaway here is really crucial.
As DeFi gets bigger, the opportunity for MEV gets bigger right along with it. And this isn't some rare fringe activity either. I mean, look at this chart. On a single day on the Binance Smart Chain, more than a third of all blocks, 35%, were hit by sandwich attacks. This isn't a once-in-a-while thing. It's a constant, everyday feature of the trading environment on many chains.
Okay, so that's the problem. It's big, it's complicated, and yeah, it's costing users real money. But here's the good news. You are not completely helpless. So let's talk about some actual practical steps you can take to protect yourself.
All right, first things first, try to use DEX and wallets that offer built-in MEV protection, like private transaction relays. These basically hide your transaction from the public mempool. It also really helps to avoid trading during those crazy high volatility periods. Using Layer 2 solutions can also be a big help since they reduce your transactions' visibility. You can even try setting weird, non-standard gas prices to make your trades less predictable for bots. And please, a huge word of warning. If you see something online promising you your own front-running bot that will make you rich, run. There are almost always scams designed to just drain your wallet. So while all those user-side protections are super important, the real long-term fix has to happen at the protocol level. The good news is the community is actively working on building a much more fair and equitable system for everybody.
There are some really cool ideas being developed. Things like order flow auctions, which are designed to actually pay you a cut of the MEV profit your own trade creates. Then there are encrypted mempools, which act like a privacy cloak, hiding your transactions' details until it's too late for the bots to react. Some are pushing for fair ordering, which is basically a first-come, first-served system. And then you have proposer-builder separation, or PBS, which is already live on Ethereum and helps to break up the concentration of power in the whole block creation process. And this quote from A16Z Crypto really nails the path forward. Because MEV happens right out in the open, on-chain, it means we can actually have some accountability. We as users can vote with our wallets, right? We can choose to use the apps and blockchains that are actively trying to minimize all this harmful MEV and protect us. It basically creates a market incentive for projects to be fair. And this all leaves us with a really fascinating final question. MEV has often been called the dark forest of crypto, a landscape that's just filled with hidden predators waiting to pounce. So as DeFi keeps growing and evolving, are all these new technologies and market pressures going to lead us to a more transparent, more fair system for everyone? Or is this cat and mouse game just going to get more and more complex, pushing all this value extraction deeper into the shadows? If you want to dive deeper into topics like this, you can find a ton more explainers over on our channel, CodeAccessHub. And hey, if you found this breakdown useful, do us a favor and hit that like and subscribe button. It really helps us out. Thanks so much for tuning in.